What are the consequences of different levels of DSCR? If DSCR level is below 1, it means that business is not having enough cash accruals for repaying the loan obligations. In that case, surely there will be a default and there is a high chance that loan account can become an NPA. When DSCR is equal to 1, it means cash accruals are equivalent to loan obligations. So this is a fair scenario. But bankers will not just settle with this. They'll be looking for more. They'll be looking for DSCR above 1. Many banks will be insisting on a level like 1.5 to 1.75. It means in those cases, cash accruals is greater than the loan obligations. So after paying the loan also, some amount have to be left over to meet the normal day-to-day operations. That's why they are insisting on a higher level. That is, this 0.5 to 0.75 over and above 1 is the safety margin for the lenders.